Hello, everyone. This is Ani at TrueViz Education, and I want to thank all of you for tuning in. We have a special guest with us today named Gabby Huguenin, and she is the founder and chief strategist of Legacy Wealth Building. Gabby is a self-made millionaire by the age of 28 and has taught hundreds of business owners, professionals, and CPAs how they can create lasting wealth. Her advanced and patent-pending financial systems have helped recapture over $1 million in taxes and protect well over $1 billion in assets. When not implementing wealth-building strategies for her customers or managing her investments, Gabby enjoys being a mother of two who calls them her why, as in why she continues to make this world a more successful and peaceful place. Thank you so much for being with us, Gabby. How are you today?
I'm great. How are you doing today?
Great. Good to have you. So let's just get started here. We want to get to know you a little bit. Why don't you tell us a little bit about your early days and how you got started, about your dreams, your goals?
Absolutely. Well, first of all, it's been over $100 million in tax savings, so that's just a little increment. And I got started in business when I was very young. My family had a very entrepreneurial background, and it's multi-generational, and so I started working in family businesses when I was about 9 years old and getting groomed and mentored. And then in my teenage years, I had business through high school. And then also after high school, I started in businesses in my early 20s. And then also we had gone through some litigation period in our family. And we had a $100+ million estate. And because of some changes that my mom had made due to the advice of some attorneys and CPAs, she had done some key things that had made detrimental impact on our estate. So I studied that out, and what I did is I created a system that helps people all over the United States and Canada with three key things, which is tax savings, asset protection, and wealth building implementation. So those were kind of the key areas that I focused on in over the last 16-plus years. I've helped people all over with those key things based on kind of the detrimental impact on my immediate family, and then I took it and I actually turned it into an actual benefit for people all over. And it's helped people all over the place now.
So you continue to educate people more about how they could avoid problems like these and help build their wealth, basically.
Yeah, so it's basically, it's kind of like the motto is make it, keep it, invest it, leave it. And I call it the 4 I's for financial blue skies. So we're going to beat inflation. We're going to actually turn interest income. We're going to grow that without the impact of capital gains or ordinary income tax. We're going to take income tax and keep it at the legal minimum, and we're going to turn insurance into an asset instead of a liability. And, you know, most people, honestly, they don't look at asset protection until there's a lawsuit, a death, or a divorce. And so one of the things that I've done throughout the years is I've gotten CPAs and tax attorneys to align with me and us, and we've actually helped people recapture a lot of money in tax savings and apply that legally to asset protection elements at the cost of that tax savings. So they've recaptured money through tax savings, through legal strategies, and then we've taken that money and applied it to asset protection pieces to their estate. I don't know if that makes a whole lot of sense, but that's basically what I've focused in on, because that's really something I'm passionate about with helping people. I want it to be to where no matter what they're doing, and if they get, if they have a lawsuit, if they get sick, if they can't run their business anymore, or if they're just extremely successful, everything is streamlined and protected as far as that goes, and then also they're paying the legal minimum in taxation.
All right. And it sounds like it could be quite a complex process to actually go through all the paperwork and things like that. And what would you say are some of the issues that you've come across and how you've solved these issues?
Well, we've really streamlined it, so that's kind of a good point, is that a lot of people look at it as a complex situation. And so what I've done is throughout the years is I'm a do-it-on-myself type of person first. So I always test everything on myself first. And then what I've done is I've created systems that can be put in place and then they can be delegated to the staff members or systems that can be automated within a business or an investment system so that the entrepreneurs or the business owners or investors can be focused in on what is most important, which is generating income, right?
Right.
So I've created those systems throughout the years. I've tested them, and I've made it to where there are a few things. Kind of lawsuit proof, and then audit proof, because people, sometimes they have a fear of being audited by the IRS, and then a lot of people have fears of lawsuits. So what I've done is I've created systems that can be automated and implemented and maintained systematically, and I've tested that on myself. And so I've made it to where it's a little bit of a process to get set up, and that's what we do. That's what our company does, is we look at that, and we look at it through systems of tax returns and entity structures, so the way people are set up. So I look at people's tax returns, I look at their profit and loss statements, their balance sheets, their financial statements, and then I look at their entity structures, how they're set up, and I can literally tell you, I can tell somebody down to the penny how much I can get them back in tax savings.
Wow. And
then I can tell them exactly what their entity structure, I can look at it within a matter of like 5 to 10 minutes. I can tell them where the holes are, and I can give them a proposal of what it would take to recapture a specific dollar amount back, like what they're overpaying in taxation. And then I can tell them what the holes are in their entity structure, and in other words, like limited liability companies, corporations, those kind of things, and I can put together a plan, a proposal, a written proposal for them as to what those holes are and help them.
So do you have a team, say, that, focuses on these specific things and, like you said, streamlining things, and so that actually helps things move forward and more smoothly, I guess?
Yes, that's the key factor, absolutely. And so what I've done throughout the years is I've looked to align myself with the right kind of people. So what do I mean by that? I mean, there's the key elements are we want somebody who's a mentor. So I've looked for people that have built and maintained 8- and 9-figure estates through at least 2 to 3, sometimes 4 generations. So I've looked at that, and I've aligned myself and gotten mentorship from them directly. And then the other thing that I've done is I've looked for and maintained, built, and sustained relationships with CPAs, tax attorneys, and attorneys, estate planning attorneys, and people like that are licensed in all 50 states and then have specific characteristics that I can then have help and benefit our clients so that they, again, can focus in on what is most important, which is their business element and, creating cash flow, staying focused on those things.
Mm-hmm. That's very interesting. So what would you say is different now from the beginning when you first got started?
Well, there's a few key things that are different. When I first got started, I was actually looking for the right kind of people as far as professionals and different things to actually do this, because where I was stumbling a little bit was there wasn't I couldn't find a lot of quote-unquote entrepreneurial-minded CPAs or attorneys and things like that. So there wasn't a lot of them that really wanted to help people save money in taxes. They just wanted to get the returns, process the returns, and that's that. And so I did do a lot of time researching and developing relationships with people who are what I call entrepreneurial-minded CPAs. And then also I built relationships with people who were mentoring me that were very, very savvy in business. And then also I myself went through different investment strategies, and I'm not afraid to tell people this. I got mentored by some people that were like, oh, don't tell people that you failed. Well, I did. I failed in investments several times. I lost money several times, and I was not afraid, and I'm still not afraid to tell people that and show people that, show them what I did wrong, how I did bad due diligence, how I did things incorrectly, what I did wrong, and I literally will show people that. And then I've also been audited by the IRS. So I've showed them that information, how I got audited, how I actually was structured the audit to where in the beginning I had a six-figure tax bill that they were coming after me for, and at the end of it, it was $7,000 with a little bit of interest. It ended up being about $10,000 that I owed. So I tell people throughout the years those kind of things, and then I ultimately look at it as I want my estate to be divided up into different assets and generating cash flow for me, and I want to leverage and hedge. So I have people that I work with that help me build, sustain, and maintain a good estate so that I am making money 24/7, 365, different asset classes, and then also that those people are actually benefiting from that as well.
Right.
So I have, like, the CPAs and stuff that are working for me, they also make money as well. I don't know if that makes a whole lot of sense, but I think it's a good idea to have the people that are working with you make money from that as well.
Of course, yeah. And just to go back to what you said earlier, that like everyone else, you've made some mistakes and you understand that some things were probably not the right things or maybe not the right time. What would you say that you've tried that hasn't worked or that led to some of those mistakes?
Well, here's the thing. There's been a few things that haven't worked, but it doesn't mean that the investment doesn't work. It meant that strategy at that time or that specific individual or that specific relationship didn't work. So I learned from those things. Okay, so I'll give you an example. So I've done real estate investing. I've done private lending secured against real estate. I've done currency trading. I've done regular stock. So I've done gas and oil. I've done venture capital. I've done network marketing. I've done so there's different asset classes. So I'll give you an example for one that failed. I put $150,000 into a currency trading venture, and it ended up being fraud. So the people that were running it, they were taking the money in and they were paying out the people below them with the money that was coming in from the previous investor. So it was fraudulent transactions. So there ended up being a receiver that came in, and the whole thing got shut down, and everybody lost their money. For the most part. The money went to the receiver, pretty much. The attorney that came in to supposedly fix everything, that's where the money went. So we learned the hard way, and so there's been other things that I've learned. I partnered with different people and ended up to where I was sick with epilepsy and had them as signers on the account. They ended up getting access to the money, spending it. So I've looked into different things, and I've found specific ways to principal protect money that's going into investments. So for instance, currency trading, so Forex currency trading, it's not a bad asset class to have money in. I've actually made really good returns on it, and I positioned it to where now it's principal protected, and it's growing very tax advantageously. And then I have somebody who is trading it on my behalf. So in other words, I'm not the one spending my time doing it. I got the base money that's actually in that invested protected. So in other words, it's insured. So if the person that's trading it, or if the market changes, or if specific rules change, or a brokerage changes, or all these different things, go into, like the presidential elections are changing, so the president's changing, all these different things that can happen. What I did is I actually did a specific strategy that principal protected the initial funds going in. And then the other thing that I did is I made it to where the gains on that, if and when it is profitable, are very tax advantaged. So it's offsetting what are called capital gains. So typically that's anywhere from 15, sometimes 35+%. So if you're smart enough to make enough money, a lot of times that goes, a good chunk of it goes in taxes. And so what I've learned and studied throughout the years is how to offset that with the right structures. So insurance structures and entity structures have been a key element in that, and then the relationships I've had with the right CPAs and the right joint venture partners and the right person that is trading the money. So I got a mentor who knew what they were doing in the trading world. They mentored the person that's now trading the money for me. I got the principal insured. I got the right money. I got it put through the right entity structure and the right brokerage. And then now today I'm actually making a good chunk of cash flow off of that every single month. It's tax advantage. It's principal protected. And it's a really good investment for me. But before, there was 3 times I lost money in that specific asset class before I got it right. So
how would you say someone could avoid something like that? Like, what are some of the red flags?
Well, I mean, that's the deal is essentially get involved and learn from someone like me, because there's, like basically you want to have, you never want to give up control of the cash. So that was one of the things I made the mistake of, is I put the money in somebody else's control.
Mm-hmm.
And so I let them have control of the funds. So now I have 100% control of the funds all the time. So I have it through my own company. I have it through my own brokerage account. So the brokerage that the money's being traded through, it's under my 100% control. So the person that has the authority to trade it, that's all they have. They can't withdraw money. They can't deposit money. They can't do anything other than trade the money. And there's a stop gap, so meaning if they go below a certain amount, they can't move that. So they can't lose more than a specific amount, right?
Right.
And then the other thing is they can't deposit funds, they can't withdraw the funds, like I said. And then when I initially set it up, I did a specific type of insurance on the principal. So I started out with a low amount. I started out with $9,000, and I got a specific type of insurance policy on my daughter because I have epilepsy. So the cash I could borrow out of that specific type of insurance policy was not as high if I got it on myself, right?
Right.
So I got it on my daughter. I immediately borrowed cash out of that type of policy. I put it in the corporate account, and then I literally took it out. I wired it over to TalentX, which is the trading account that we use, and then I have the trading arrangements on it, so it's where the person that was trading on my behalf to go in and trade. And then it's made money, a good substantial amount. And then, yes, we have 1099s that are coming from the brokerage, and so there is capital gains, but it's being offset because of the type of insurance system that we had set up on it. So that's that control and that type of accounting system and those things. And the key thing also is that we have someone who is a CPA who understands the type of accounting. So in the chart of accounts, in the profit loss balance sheet, journal entries, general ledger, all that stuff, they understand the accounting and they understand the tax terms. So I don't have to go in there and try to fight with them and tell them, that I'm doing something wrong or that I'm doing something right. They understand that. So 9 times out of 10, when somebody starts working with us, they end up converting over to our CPA and having them take over.
Right.
And then they'll have audit insurance. So if they do end up getting audited, our team will go in on their behalf and go through an audit if they do end up getting audited. Because that's a fear of a lot of people, is that they're going to get audited by the IRS.
Of course, yeah.
So that's something that we have in place.
That's awesome, actually. It sounds like it's all kind of done for them. All they have to do is just show up, basically.
It is true. And so, I don't give investment advice per se, but I show the things that have gone wrong and the things that are going right? And I've shown the things that, how they've gone wrong, and then I've shown the systems that I've put in place to get it right and to streamline it so that can be a side income, because most people have a way that they're trading hours for dollars. I look at it as 3 elements. This is something that I did learn from a previous partner, is we looked at cash influx, appreciation, and cash flow. So we had things that were appreciating assets, so they were gaining in value over time, and then they were also typically cash flowing. They were bringing in monthly cash flow. And then people were doing things, trading hours for dollars, so there was cash influx. That they were working, they were either self-employed or they were employed by a company typically. So if it's self-employed, it was their own company, and if it was employed, they could be employed by their own company and have a paycheck they were paying themselves, or they could be working for somebody else. And we get a plan through a strategy 12-4-5 or 12-4-7. There's 12 months in a year, 4 weeks in a month, and 5 to 7 days. And, you know, the time frame that they could be making money, and when we would reverse engineer how much money they wanted to be making, and we would identify exactly how much they would have to be making per day to do that. And if it was, let's say you're going to be trading Forex, I would know, for instance, my bills are $8,000 a month, and for my individual personal bills. That's what I have to have every single month coming in to cover the bills, right? So we break it down to 7 days a week. I would do 12 months in a year, 4 weeks in a month, 7 days in a week. We can't be trading that many days. There's 5 days you can trade, sometimes 6. So what I would go do is I'd say to the person who's going to be trading on my behalf, I want to make this much per day that you're trading to cover my $8,000 worth of bills. And if they can do that, great. If they can't, if it's going to be too much of a risk, then I don't push them, but I have them identified that they know that that is our goal. I want them to make that much money for me. And so then it's my job on the other side to go, okay, how can I grow this tax advantageously so that it takes a little pressure off of them? So typically the 15 to 35% capital gains tax, I want to offset that. I want to wipe it out, and I want to make sure that everything's asset protected, so that if there's a lawsuit or if there's anything like that, I'm not going to risk the chance of losing that. And then I do this on several different asset classes. I don't know if that's too much, too detailed or whatever else like that, but that's what I do with people. So I have them stay focused on what they're doing. So if they're a doctor, I say, go be a doctor. And then on the side of that, through a quick period of time, maybe a couple months, we put a strategy in place to identify exactly what their monthly income needs to be for their goal in retirement or right then. And we come up with an idea on how to get that implemented, what it is, how to get it implemented, how to have a tax advantage, and how to have it go even when they're dead.
So it sounds like all of this is quite a learning experience, and it's very in-depth. And I imagine there's a lot of ups and downs that come along with it, too, to grow a business like this. So what advice would you give to someone that wants to take their business to another level? What do you think was like the it factor that helped move things along?
Have someone that's done it do it for you.
All right. That's a
so
great
get
advice.
Involved with us. That's the key thing is and identify that that's the case, So that's why I put the information out there. So that's why I show people. I have testimonials from people. Jeff Black, who's the founder of Hotels.com, also Vista Talk Plus. He worked with the NSA for over 15 years. He's one of our strongest testimonials, and he'll say to you, Gabby saved me so much money in taxes, if I would have worked with her years earlier. And, he's basically, we're still connected with each other to this day. So someone like Jeff Black is not going to be affiliated with someone like me if I haven't helped.
Right. So you'd say the most important thing is probably, building relationships with people, and that's what really gives the business that push. That's what's really important, is the people that are involved.
Yes, and the other thing that I've done is I kept it really personalized to where it can be implemented on an individual basis. So I haven't ever ruled anyone out. So we've helped people that are making, $15,000 a year, all the way to people who are multi-millionaires.
Mm-hmm. And what would you say if somebody wanted to start a business right now? Like, what is the first thing they should do, or what's the first thing they should know?
Well, the first thing they should know is that They want a structure to where they know exactly how much they want to be making. And then what we do is we do that strategy of the 12-4-5 or the 12-4-7, and then we look at the right kind of structure so that their taxes stay the legal minimum so that they can retain the most amount of income possible. And then for me, I would always look at it and say, okay, is it something that's actually going to cash flow for you? You know, is it something realistic that's actually going to bring you in income no matter what the economy is doing? And then the other strategy is that I would look at and I would share with them something that I'm working on, which is getting paid to pay your bills, getting paid to pay your taxes, getting paid to pay your mortgage, and so that you can be creating cash flow out of things that you're going to do no matter what. You're always going to have your bills. You're always going to have taxes. You're always going to have those two key elements, and I'm looking and I have created a way to turn those things into an asset so that that can be re-put back into a business or just everyday, you know, ideas, investments, or business so that you can have that as cash flow.
Wow, that's very interesting, and there's a lot of value to all of that. I want to say thank you so much for sharing all that information, and I'm sure our listeners are very excited. As we know, the information like this doesn't flow around, and it's not easy to come by, and I really appreciate you taking this time and, you know, giving us a little bit of insight about all of this. So just again, thank you very much. We unfortunately have come to an end. So just to wrap it all up, tell us just a little bit about what it is that you do specifically with legacy building wealth building right now. Are you still, and I know that you are the chief strategist, correct? So what is it you enjoy about it most, and just give us a little bit of an overview of how that works or how you work it.
So the thing I enjoy the most about it is I love helping people save the most legal amount in taxes, and I love the asset protection element of it, and I love taking that money and put it back into their wealth building. So again, make it, keep it, invest it, leave it. So I love that element of it. And the thing that I'm inspired by is that we're putting that element into our school systems. That's our ultimate goal, is a nonprofit organization that starts out with first graders through 12th graders. And by the time they graduate from high school, they will never have to go into debt for a car,
wow.
mortgage, college, wedding, travel, anything that they ever do will be through their own system. So they will never have to go to outside sources. So that's something that really inspires me. That's why I'm doing what I'm doing to this day, okay? And then the thing that we do to do that, the other thing that I love is that the cost of working together with me and us, Legacy Wealth Building, I've always made it pay for itself in tax savings. So what that means is I gather the necessary information to ensure that the cost of working together is covered by the tax savings that I can get back for someone. And if I can't do that, I end up refunding the person the money, and I've never had a refund go back to somebody in the 16-plus years we've been working and doing this.
That's very impressive. That's quite a service. I hope you guys hear it, guys, firsthand. This is the kind of service you just can't beat. It sounds like there's a guarantee, and it's never too late to start. You can start at an early age, even from high school. That's very impressive, and it's so, I don't think people realize how much value there is to this. It could basically set you for life, which is very cool, very, very cool. Thanks again. I'm sorry, what was that?
My two kids, they've had this in place since the time they were born. My daughter's 16 now, and my son is going to be 10 in August, and they've had these systems in place since they were born.
Wow.
Yeah. So we can do that.
Where were you when I
Well,
was born?
I know. It's fun. I love doing that. So I know I interjected a little bit longer, but it's something that, Robert Kiyosaki always calls a lot of, kids doodads a lot of times, and I call them write-offs.
Well, it's been such a pleasure speaking with you, Gabby. Thanks again so much. It's been wonderful.
Have a great day.
You too.
All right.
Bye-bye.
All right. Thank you.